Okay, and we're live. So this stream today, we're going to be talking about DeFi. So there's a, you know, when I first started out, you want to make money from crypto, you have to buy and sell. That's all you could do, right? You go to Bittrex. Maybe if you're a little smart, you go to Ether Delta, and you buy low and you sell high, and that's it, right? People didn't even know how to short back then. Right now, not only can you long and short, right, but you can also participate in DeFi, manage your money, put them in certain places, and actually get kind of a guaranteed, more or less guaranteed income. Well, while it lasts, right? So today I'm going to show you, especially for you absolute beginners, I'm going to show you what you need to get into DeFi. And at the end, for those of you who are a little more advanced, I'm going to show you some of the more advanced, a little more of the advanced tools that I've been showing the Nest Club members over the past few months. But first, a few words from our partners.
PrimeXBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at thebirbnest.com/bistro. Equinix is a NASDAQ-listed digital assets company offering crypto exchange, custody, asset management, borrowing and lending services, and more. Enhance your crypto wealth today at thebirbnest.com/Equinix. The Change DeFi app allows you to become your own digital bank with automated financial services that give you complete control over your wealth while enjoying 100% freedom and security. Sign up today at thebirbnest.com/change. Join over 10 million users trading on Crypto.com, the world's fastest and most secure crypto trading platform. Earn up to $50 of CRO with the code CryptoBirb when staking at thebirbnest.com/cryptocom. Lease Capital is the first launchpad on Arbitrum. Get access to early investments in the most promising projects at thebirbnest.com/leasecapital. Eureka helps creators protect, manage, and monetize their work with the power of blockchain. Secure your rights and your revenue at thebirbnest.com/Eureka. All right, let's get started. So this is the guide to DeFi for beginners, right? So to start off, what is DeFi? Basically, because of all the blockchain technology and I know everyone knows how to use crypto now, it's more widespread. You now have the opportunity, okay, to take your capital and instead of handing it over to the bank and getting 1%, less than 1%, less than half of a percent of interest, right? You can put it into different places on the blockchain, and you get paid for it. Okay, that's basically what DeFi is. You put your money somewhere. Maybe you have to trade it, convert it into some form that they want, and in return for your service, for your capital, you will get some tokens as a reward. And that's basically what DeFi is. Okay, and that's what I'm going to show you here today. How to do it, kind of some things to look out for to see where you should do it, and how to stay safe while you're farming yield in DeFi. Okay, and there's different levels of DeFi. So while you're watching this, you can decide for yourself. If you're just starting out, maybe you want to do it the easier way. If you're more advanced, maybe you want to do it the harder way, but it gives you more control. Up to you. But there are different levels. There's centralized. Okay, DeFi is decentralized finance. Okay, so there's centralized finance. This is not actually DeFi, but some people who are just starting out, maybe they don't even know what DeFi is, but they want to get some of that yield. Maybe this is you. they don't want to do all that, do your MetaMask and bridging and gas fees and worry about moving to new farms and all that stuff. If that's you, then you can go to a centralized service. So that's something like Celsius.network. So maybe I can make this a little bigger for you. Okay. So you can see Celsius here. You can get, what is this? If you deposit $3,000 worth of BTC, I just did this earlier today. So it should be relatively accurate. You'll get 7.81% APY. But you have to hold it for a year, and that's if you are willing to take sell tokens. Okay, so this is better than a bank, yeah, but it's centralized. And what's bad about that? What's bad about being centralized? You have to trust what Celsius is doing with your money. You have to trust that they have the liquidity for you to withdraw when you want to withdraw it. You don't know what's going to happen in a year from now, right? Maybe they get hacked. I'm not sure if it was Celsius, but one of these centralized borrowing, lending places, they accidentally sent out money to people that they weren't supposed to. Just some kind of employee error, I guess. And there was this whole headache there, right? So you have to trust that this place will manage your funds properly. So if you're willing to take that risk and you don't want to bother with all that stuff, then yeah, here, go to Celsius. You can go to Binance, has something like that. PrimeXPT has something like that. FTX has some staking. Just go to a centralized exchange, stake your tokens, done. You don't have to watch the stream anymore. Do what you want with your life. But if you want more control, if you want to be able the freedom to go to the places with the highest yield, and you want to manage your own security, then keep watching, right? Right. If you've never done DeFi, the basic tools you need your MetaMask or another crypto wallet, depending on what you want to trade. You need the network token. This is to pay for gas. So everything you do on the wallet, you have to pay for the transactions on the blockchain. So if you're doing DeFi on the Ethereum network, you need Ethereum tokens. You're doing on the Solana network, you need Sol tokens, okay? And you need of course, your initial capital. The more capital you have, depending on the size of your capital, that's going to determine the kind of strategy that you're going to, the kind of yield farming strategy that you're going to be doing. So I'm going to go very quickly through the MetaMask setup steps. If you need to pause, you can pause the video later on, come back and watch again, or just Google the guide. This is very common, but I'm just going to go real quickly through the MetaMask setup. So you go to your Google Chrome, install MetaMask as it's like an extension, an add-on, right? And then you'll see this screen. You set it up. You get set up. You create a wallet there. Click agree or disagree, whatever. Then you make a password. This is the password for you to log into your MetaMask. Okay, this is not actually the password. If you move to a new browser, you'll have to make a new password, right? So this is just the password for this browser here, for whatever browser you've installed it on, to access your wallet. And this is the important part. Okay, this backup phrase, this is going to allow you to install your wallet in any browser. So you have to make sure you write this down. So you're going to get a bunch of words here. You write that down. So I blacked this out in here. You write all these words down. Put them on a piece of paper somewhere. Don't take a picture. Don't put it online. Especially if you don't put it on your computer at all. And then note it down. And then they'll tell you here, right? And then when you get to this step, you confirm. You click the correct order of the words that you've received here. Okay, and once you confirm that, and again, you make sure you keep this safe. You never reveal this to anybody, nobody at all, only yourself. So if somebody says, I'm a coin support, I need your seed phrase, this backup phrase, I need your seed phrase to help you with your wallet, don't give it to them. They're scammers, okay? Only you need to know this phrase. Only you and MetaMask or your wallet will need to know this phrase. Once you're done, that's it. You're set up. Okay, and you should have your wallet. You have your address should be over here, and then you'll need to deposit some of the token This is Ethereum, so you want to deposit some Ethereum into this address to pay for gas, and that's how you get started, right? You get someone to pay for gas. Okay, that's pretty basic. Let's move on. Next thing you need to do now, when you right now there's so many networks that you have to keep switching servers. You have to switch RPC servers. So the old way of doing it is you have to maybe you can see it here. I'll zoom in for you. You have to go to your MetaMask. So you click here on your MetaMask, right? Go to a custom RPC server, and then you type in the settings that the network gives you. You want to go to Avalanche, you have to type in these settings, right? But I don't do that anymore. No one does that anymore. I mean, maybe some people do, but I don't do that anymore. I do this automatic way. Okay, so for example, if you want to get into Phantom, if you have MetaMask set up, you go to Spooky Swap, for example, you click connect, and they'll say, hey, you need to change to Phantom. You're not connected to Phantom. Can you approve these settings? And then we'll just add it in for you. Next time you use MetaMask, the settings will be there for you, and you can just switch. You can just switch, like this. You can just switch back and forth between the networks you want. Okay, so that's with any of the big popular exchanges will have this feature now. So just add it that way. And if you really can't find it, if it's not working for some reason, then yeah, this is the manual way that you can do it. So basically, the RPC server is what your MetaMask connects to talk to the blockchain. Okay. So next, how to set your MetaMask, and now you have to choose your ecosystem. So I'm going to real quickly give you a brief overview of why you might pick one ecosystem over another. Okay. Ethereum's the gold standard. Everybody's on Ethereum. Ethereum has been around for a long time. Everybody trusts Ethereum. But the problem with Ethereum is the gas fees are crazy. Cost $100, maybe $200. If the smart contract is very complicated, it might cost like $300-400. If the gas is very high, you might not be able to do anything. And with DeFi, what you have to do is you have to deposit your money, stake it, convert it into tokens, and everything is a transaction. Everything costs gas. So if you have very little money, if you have $1,000, if you have $300, you don't want to be doing DeFi on Ethereum because the gas is going to just eat up all your money. And trying to farm $300 on Ethereum, maybe you pay $200 in gas fees, and and you have to leave your money for like 20 years or something to get your money back. So right now, not worth it if you have a small amount of money. If you are a whale, if you have like $500,000, if you have $1 million, maybe you want to farm on Ethereum because Ethereum is trusted. It's got a lot of the more secure contracts. Everyone has their eyes on Ethereum. So if you're a whale, yeah, stay on Ethereum, right? For most of the audience, I think you probably have a smaller account. So you probably want to go on one of these cheaper networks. So these layer 1s and layer 2s. So layer 2 for Ethereum right now is like Arbitrum and Optimism. And layer 2 is basically, it helps to, Polygon too, I think, helps to scale Ethereum. It helps to scale Ethereum. So it's like you move your Ethereum assets over to these layer 2s like Polygon. And then you can trade there on the layer 2, which is going to be a little more centralized perhaps, but it's going to be cheaper. And then once you are done trading on there, or you're done staking, and you want the security again of the Ethereum network, then you bridge right back to the Ethereum network. So that's a layer 1, layer 2 thing, right? So for a beginner, you want the Ethereum experience. Maybe you want to bridge over to Polygon and try it on there first. This is more centralized. Polygon's more centralized. It's compatible with Ethereum. So you'll be able to test out everything much easier. If you make a mistake, you can unstake, change tokens. You don't have to worry about it, right? So if you want to test out, I recommend non-Ethereum. Try Polygon if you want. There's and then one of these other networks. Avalanche is popular right now, but it's a little bit more expensive than Polygon. Still not as crazy as Ethereum. And my personal favorite is Solana. Okay, Solana is its own network. It's not a layer 2 Ethereum. It's got the backing of FTX. you can easily, if you have an FTX account, you can easily move assets into FTX, withdraw them to your Solana wallet. You want to sell your stuff, withdraw. You can withdraw from your Solana wallet to your FTX account. And Sam is investing a lot of money into Solana, so I think the whole ecosystem as a whole has a bright future. So that's why I'm bullish Solana. Special mention to Binance Smart Chain here. I don't really like it personally, because it's very centralized and they're not really developing the technology that much. But Binance is spending a lot of money and it's very popular. Everybody has Binance. So if you find a good yield farming opportunity on Binance Smart Chain, yeah, sure, go ahead, stay on there. But personally, I don't like Binance that much. Some people have been finding some good yield farming opportunities on Phantom as well. Some stuff I haven't put in here, like Polkadot is new. Luna is worth investigating. But my pick, probably Solana right now. Probably Solana for the long-term future. Avalanche is kind of hot right now because of their yield farming incentives. Binance launched a $1 billion yield, well, not just yield farming, $1 billion ecosystem incentive. Solana just keeps having incentives all the time. Not necessarily yield farming, but they pay developers, incentivize them to join Solana. They have hackathons all the time. So yeah, I'm bullish Solana. So yeah, pick your ecosystem, all right? Do your research. If you're not sure, try playing around with Polygon maybe, or my suggestion, Solana. Right. So once you pick your ecosystem, excuse me, one. Okay. So once you pick your ecosystem, all right, what you need to do is you need to move your funds into your wallet, into your Metamask wallet. So let's say if you picked Avalanche, for example, if you picked Avalanche, you have your MetaMask set up, you have your address here. Sorry. Then you have two options. Okay, you can either go to a centralized exchange like Binance, FTX, KuCoin. These three will probably cover everything you need if you have access to all of them. And you withdraw into, so for Avalanche, you want to withdraw into the C chain. That's a smart contract chain for Avalanche. You take the wallet address you've gotten here, up here. Not there. It'll be here. You just copy it, you paste it in here. You withdraw whatever you want, and then so I recommend you withdraw the main chain token. Okay, you want to trade an Avalanche, withdraw AVAX because you need AVAX to pay for gas, right? And then everything will be in AVAX pairs. So if you want to trade into something else, you can easily trade AVAX into whatever you need. So that's the easier way, but you need to go through a centralized exchange, okay? If you don't like that, if you don't have access to that, or you just hate centralized exchanges, you can use a bridge. You can use a bridge to transfer your funds over. So what that is if you have your funds already on Ethereum, in your MetaMask, sorry, in your MetaMask, you can use a website that's a bridge to move your funds over from one network. So let's say from Ethereum over to Solana, from Solana over back to Ethereum, from Ethereum to Polygon, from Ethereum to Avalanche, maybe from Solana to Avalanche. Depends on the bridge, right? So I'll show you that right now. I'll bridge some funds over to Ethereum because in a bit I'm going to show you a little bit of do some stuff on an Avalanche because Avalanche is pretty hot right now. Okay, bridge. Where's the bridge? Avalanche. Okay, here's the Avalanche bridge. So this is bridge.avax.network. This is the Avalanche bridge. You want a bridge for another network? Google it. Or I'll show you a tool here in a bit that'll show you all the networks. But anyway, okay. So I have my MetaMask account connected here. Okay, I want to move some funds from Ethereum over to Avalanche. So I'm gonna make sure Ethereum's on top from Ethereum to Avalanche. So you see here, I'm on the Avalanche. It says you need to switch to Ethereum. Okay, I'll switch it. So I never have to input any of that stuff. Okay, so I'm on Avalanche now. I'm on the Ethereum network now. I want to move some ETH. I want to move some ETH. Come on, ETH. Okay, I want to move some ETH over, let's say 0.02. I need some a little bit to pay for gas. I want to bridge that over to the Avalanche network. Let's do this now. What's going to happen? Click transfer. You probably want to do a bigger amount than that just to make sure it's worth the gas fees. But this is just to show you, okay? So you're going to move it over to Avalanche. And then you should see here the screen pops up. This is the gas fee I have to pay. Oh, what is that? $20 in fees to move $80. Oh, that kind of hurts. So yeah, make sure you do a bigger amount. If it's $1,000, you pay $20 gas fees. Not that much, right? So confirm. And then it's going to start bridging over. Okay. I might actually go back to my presentation while this is doing and come back to it. But you see, what's going to happen is it's going to move. Oh, okay. Okay, it's done wrapping. It says it's going to bridge now, and I have to pay another gas fee. What? Great, thanks. Yeah, pay another gas fee. Okay, now it's transferring. Okay, and once it gets, I'm not sure. Sometimes once it bridges over, you might have to do another confirmation. 35 confirmations. Is that 35 confirmations? Jeez. Okay, maybe 2. I'm not sure. But okay, let's go back. Let's go back, and I'll show you that once it's done. Okay, so you can use a bridge. That's the bridge right there, and you can move your funds over. The problem is, you see, I moved ETH over to the Avalanche. If I didn't have any AVAX already on Avalanche, once my ETH is over there in Avalanche, I can't do anything with my ETH because I can't pay for gas. So it's just going to be sitting there. So if you can, transfer the native token. Unless you already have the native token already, then yeah, transfer whatever you want. Okay. We'll come back to the bridge when that's done. All right, next. So you know the ecosystem. You have Metamask set up. You have funds over. Now you pick your strategy. Do you want high risk or low risk? Do you want to accumulate coins or do you want to just farm and dump? Up to you, right? If you want low risk, then whatever tokens you get, sell them. Sell them right away, right? Sell them and hold stable coins, hold Bitcoin, hold ETH. Right? If you want to take a little more risk, maybe sell them and hold the network token. Like sell your yield and hold Avalanche tokens. Sell your yield and hold Solana tokens. Totally up to you. You can, and it's not all or nothing. You can sell half into Bitcoin, sell half in stable coins, and then keep half in the farm coin, or keep half in the network coin. Totally up to you. So customize it as much as you want, up to your own risk profile. Okay. All right. Now I'm going to start with the lowest risk way for you to get started with DeFi, and that's putting your money into a money market, and specifically put it into Aave because it's well known. It's also Curve, but Curve interface is a little less friendly, so maybe you prefer Aave. So here you have Aave. What you can see here is basically deposit APY and borrow APY. Okay, if you connect to Aave. And I suggest Aave again because it's been around for a while. The smart contract has been tested by this point, that you can pretty much trust that your money is not going to get hacked. Okay, so this is a safe place for you to start. So you go to Aave. If you deposit your funds, you're going to get the deposit APY. So you keep your money in here you keep your DAI in here for a year, you're going to get 5.43%. You keep your USD in here, you're going to get 3.27%. And you can also borrow money. So once you've deposited stuff in here, you can start borrowing money to go do stuff like to go farm, to go to short or whatever. Okay, but for the basics, once you borrow money, you pay the borrow APY over here. So you see here you pay 7% to borrow. All right, but now I'm talking to you about farming, right? So the very basic thing is you just deposit your stable coin in here. You get the deposit APY, and that's it. You get 3%. That's not bad. That's better than your bank, half a percent, 0.01%. That's not too bad. But from time to time, you also get incentives. Like I said before, people are going to pay you to put money where they want you to put it. Okay, so Polygon. So Aave is on several networks. It's on Ethereum. It's also on Polygon and Avalanche. So on this screen, I've switched to the Polygon network, and I'm gonna maximize it for you here. So you see here, if you borrow, what is this? If you borrow USDT, you pay 5%, right? But you see down here, it actually says 7.52%. What is that? That is they're actually paying you 7.52% to in Matic tokens, because they have a temporary incentive. They're going to pay you a little extra to borrow money. They're paying you to borrow money. You haven't heard that before in traditional finance. They're paying you to borrow money from them. So you can borrow USDT from them. You pay 5%, but you get 7%. So you actually have like 2% profit. Okay, so yeah, you can do that. So this will change. The additional incentive will change all the time. There's Aave and Avalanche. Avalanche used to be pretty high. Right now it's kind of low. So this will change over time. So you can't just deposit in here and just leave it. You have to keep coming back and checking it, maybe once a day, once a week, up to you. So this is the basic level. Deposit and get that basic APY. Then if you want to go a little higher risk, you have to start managing it. Then you can borrow something. You can deposit USDC, and because USDT has a little higher higher Matic yield, you can borrow some USDT. Okay, and this is starting to be a little more risky. Why is it risky? Because you have to make sure you manage that borrow APY. Make sure you have to pay enough to pay the interest back. And then once you borrowed it, you can go another level. Okay, so you've deposited USDC, maybe you borrowed USDT. What do you do with that USDT you borrowed? You can deposit that USDT again and get the USDT APY. You can deposit the USDT and get this additional 4%. So you get this 3.27% plus 1.42. So you get this 4%. You get the 2% here from the difference, and then whatever you've borrowed, you deposit in here and get an additional 8% over here. And you can keep doing that several times if you want to. Of course, every time you're going to have a little bit less and less borrowed. But just make sure you manage your collateral. Okay, so that's going into loops. You can also, if you want to short, let's say I think Bitcoin is going down. I want to short it. I don't want to go on Binance or an exchange to short it. You can manually short it. Let's say deposit USDC, borrow WBTC. You get paid a little bit, I think, if the yield is high enough. No, you don't. Okay, you just break even. You can borrow the Bitcoin, sell it on the open market, and then when Bitcoin is cheaper, buy it back and then return it here. So that's you manually shorting using the money market. You can farm with the assets. So you can take the deposit USDC, borrow USDT, take it to another network if you want, bridge it to another network, and farm somewhere else that has higher yield. All right, let's check back on the bridge and see if it's okay. A little more. We'll come back to it. All right, so that's the basics, money market. Right? If that's all you want to do, that's fine. You'll get more from the bank. You get more than you do from the bank. If you want to go a step further, this is not enough for you. Okay, this is not enough for you. You want to go a step further, then you have to start looking at liquidity pools. So what are liquidity pools? For those of you who don't know, maybe you've heard of Uniswap. Uniswap is a place that people go to trade their tokens. For example, you can trade your Ethereum for USDC. You can trade your USDC for Ethereum. And how does that happen is people put their money, everybody pools their money into the USDC Ethereum pool. So when you want, let's say you have some USDC, and you want to, you can put it into, you want to trade for Ethereum, you put it into the pool and then take the equivalent amount, the equivalent value of Ethereum back out. That's how you trade on Uniswap, right? Basically, more or less. But how does this liquidity pool get created? Well, if you want to start farming, you have to start sometimes make some liquidity pool tokens. Why? Because the network, like for example, the Avalanche network, maybe they want people to be able to trade Avalanche for Ethereum. So they'll incentivize you by saying, hey, if you make some Avalanche Ethereum liquidity pool tokens, we're going to pay you some Avalanche tokens. Something like that. Okay, so you have to know how to make a liquidity pool token. I'll show you this on Avalanche in a bit. Basic concept, you enter the pool with equal amounts of 2 tokens. So in this example, $500 worth of ETH, $500 worth of USDC. Let's say I have both. I deposit them both into the USDC ETH pool, and I will get back LP tokens. These are liquidity pool tokens. This represents your ownership of, okay, let's say my $1,000 worth of assets. My mouse is not working. Okay, let's say my $1,000 worth of token of assets gives me 0.01% of the liquidity pool, whatever. All right, this just represents my ownership share of the pool of the tokens in the pool. Okay, so maybe I'll get like, I don't know, 5 LP tokens, and if the pool has 500 LP 500 LP tokens, everybody has 500 overall. That means I own 1% of the pool. Okay, so when there's trading happens, there's some fees that happen. So technically, you can earn some money just from the buying and selling. You get some fees. Now the problem is, okay, so that's how a liquidity pool works. The problem is when you exit, you don't always get the same amount of money back. Mouse. There it is. When you exit, you don't get the same amount of money back. So, okay, so you have your LP tokens that you got, right? Let's say it's been a month, it's been a week. You want to withdraw your LP tokens now. So you want to exit the pool. You're leaving the pool now. Okay. You're not going to get $500 worth of ETH and $500 USDC back. You're going to get, I don't know how much. Why? Because people have been trading in this pool. And every time a trade happens, if someone buys some ETH, if someone sells some ETH, you're going to get, maybe you might come back with a little more USDC and a little less ETH. So if ETH goes up, basically if ETH price goes up, you're going to get more USDC and a little less ETH. If ETH price goes down, you're going to get more ETH and a little less USDC. Basically, impermanent loss means if the price goes up or down, whichever way is worse for you, that's going to happen to you. Okay, that's impermanent loss. So if Ethereum price goes up, you want more ETH when Ethereum price goes up. But because you're in the pool, you are helping people trade. People want to buy more ETH. You're selling your ETH to them, and you actually have less ETH. But you'll get more USDC in return. So that's impermanent loss. That's actually bad for you. Because if you just held ETH and ETH went up, you would have made more money, right? But because you were in the pool, maybe you still get more money than you did before, but you'll have a little less than you did if you just held ETH. And the example I like to give is, if you enter the pool, when you enter, you want equal amounts, right? So you enter with $500, and it doesn't have to be ETH. It can be AVAX, it can be Solana, it can be random farm token, right? They're going to want an equal dollar value of the other token. So when you enter, it's going to be balanced. Now, over time, because of the price of ETH, goes up. Let's say your ETH is now worth 800. Your ETH is now worth 800. So what's going to happen is they want to make sure this is balanced. This needs to be equal amounts, right? So what's going to happen is they're going to sell off some ETH, sell off a little bit of ETH to make sure that you end up with equal amounts again. So maybe you end up with something like that. $600 worth of ETH and $600 worth of USDC. Maybe you originally had 0.1 ETH, right? And because of the balancing that happens, you're going to end up with maybe 0.08 ETH. Worth a little more because of the price going up. Okay, so it's always going to keep balancing the two sides out. And that's why you're going to get impermanent loss. You won't get the same tokens you got when you went into in the pool. Well, then when you leave the pool, you're not going to get the same amount of tokens. So bear that in mind. So actually, impermanent loss is a pretty bad deal. So unless now, if you have if you're trading if you're trading two stable coins, let's say this is USDT, then you don't worry. Then you don't have to worry about impermanent loss. If you're trading stablecoin, yeah, you get a little more USDT, a little less USDC. That doesn't matter to you. It's $1, right? And plus, you get some of the fees, the trading fees that happens when people trade in the pool. So if you have a stablecoin pool, yeah, you get a little. It's no impermanent loss, but the yield is less as a result. Okay. All right, now we're going to get into farming liquidity pools. Let me check again to see if the bridge is done. What happened to the bridge? Where'd you go, bridge? Am I not in the bridge? Oh, it's done. And it says I got an AVAX airdrop. Okay, but anyway, it's done. Let me check. Did I receive I'm going to switch to the Avalanche network. Did I receive my... I don't think I did. What is this? Did I get it? Oh, right. Yeah, because I'm looking at AVAX. It should be ETH. It should be... it's probably there somewhere. We'll check. Okay, so that's the bridge. That's it. That's all you had to do. Okay. By the way, guys, if you have any questions, make sure you type in the comments. Okay. All right. So now you made your LP token. Now this is where you get into the big boy stuff. This is where you start getting the higher yield. So you saw on here on Aave, you got like a single digit APY. Sometimes, occasionally, you might get like 10% maybe. And oh, by the way, this is not going to stay high forever, right? In a bull market, everybody wants to buy altcoins. So your stable coins, you put them in here, they're going to be worth a lot more. You're going to get a higher yield. In a bear market, everyone's selling to USDC, USDT, and they're going to still want interest on it, right? So everybody's going to be depositing their stuff here. So they have too much stable coins, then you're going to get less money for your stable coins in a bear market, okay? So you can't rely on the stable coin yield the whole time. This fluctuates the whole time. Okay, LP tokens. You've made your LP tokens. Now you're going to get, how much is this? So this is on Avalanche. The Joe AVAX gets you, what is this? 59% plus 23%. This is basically they have an incentive program. So basically, I think this is 59% in Joe tokens and 23% in AVAX tokens. That's your yield compared to what, 5% on Aave. So this is why you want to get into the LP tokens, because of the higher yield. But the problem is that the price also fluctuates because of impermanent loss, one, and the price of Joe and the price of AVAX also fluctuates. So if they both go up in price, that's great for you. If they both go down in price, right? And bear in mind, this is 59%, over a year, right? This could go down 59% over the course of a few months. And then this is not going to cover your losses. So that's where I told you earlier on, you have to decide your strategy. Do you want to accumulate your tokens, or do you want to dump them? So that depends on what rewards you get. If you get Joe tokens, well, it depends on how bullish you are on Joe. Do you think in 2 months, 3 months, 4 months from now, Joe tokens are going to be worth more than they are now? If you think they will be, then keep them. If you think you don't care, you just want to manage your risk, then once you get your rewards, you harvest them, sell them right away, and then you have no risk. And then if you keep selling them right away until you get, let's say you put $1,000 in, you can keep selling it until you get your $1,000 back in stable coins, let's say. At that point, you can change your strategy, right? So you don't have to stick to one. At that point, you can decide, okay, I've got my money back. Now I'm willing to maybe accumulate a little bit of Joe. So then maybe you can switch to holding some Joe. and you also get some AVAX. So maybe you decide, I want more. AVAX is a safer coin because it's the ecosystem coin. Everybody's using Avalanche, so let's keep my Avalanche, but sell my Joe. You can do that too. Or you want to sell all of them. You can do that too, and you can trade them into Bitcoin, trade them into Ethereum, trade them into stable coins. Totally up to you. And the basic rule of thumb: the higher the APY, the higher the risk. Okay, so if you see like 50 million% APY, that probably means something risky is happening. So investigate, and probably if it's higher risk, use a little less money in there. Okay, the next thing you can do is you can, so this is the basics, right? You can take your liquidity pool tokens, stake them into whatever place accepts it, get that APY, harvest it, and sell it. You can use an auto compounder. This is higher risk. Okay, what's an auto compounder? So I showed you, so this is Trader Joe. You can put the LP tokens in here, and you can get, what is this? 154% APR. Okay, so if you held that tokens in here, you're going to get 154% return. Probably in Joe tokens, I think. And what an auto compounder does, this is now Yield Yak. This is the Yield Yak website. It takes those LP tokens. Okay, when it comes time to harvest, like here, you can harvest here, right? When it comes time to harvest, it harvests them for you. It sells them half to create new LP tokens for you, enters the pool for you, and makes new LP tokens and stakes them again. So let me repeat that for those of you who didn't catch that, okay? Basically, when you get your yield from this farm, the auto compounder sells your yield or half of your yield, makes new LP tokens, and stakes it again. That allows you to auto compound and results in this is the same farm here, but you get 279%. Why is that? It's the same farm. How do you get higher? Well, because the auto compounder, maybe every 15 minutes, every hour, depends on the auto compounder, will keep selling your rewards and staking them again for you as in the form of LP tokens. So this is potentially higher reward, but you don't get to sell your yield for stable coins or Bitcoin or whatever. They just become more LP tokens, so they get exposed to impermanent loss. So it's up to you which one you prefer. Okay, but this allows you to compound without having to stay online all the time. But sometimes, they take a fee sometimes in exchange for this service. They might take some fees every time they auto compound for you, or take some fees every time you exit, like a few percent. So it's up to you. You calculate whether that's worth it or not for you. I'll show you this in a bit as well. And finally, this was actually the traditional way of quote-unquote yield farming. You can just stake single tokens, and a lot of the protocols now are allowing you to stake your farm tokens or stake your whatever token. So this is Joe on Avalanche. You can stake your Joe, and you get X Joe. Okay, and then they're going to use the their revenue to buy back Joe into this X Joe pool. So basically, over time, your X Joe is going to be worth more Joe. Okay, so you can see here that so it probably started out as 1 X Joe equals 1 Joe, but over time, because of buybacks, now 1 X Joe equals 1.17 X Joe, 1.17 Joe. So when they keep buying back, your X Joe is going to keep being worth more. A lot of protocols have this. Spell has this as well with the S spell. So this is one way for you to, while yield farming, if you get some farm tokens, if you believe in that protocol a lot, you can stake them and get more tokens over time. Okay, and finally, you have to, well, not finally yet, there's still a lot more to go, guys. You have to manage your risk. Okay, so you make sure when you're farming, you know who's creating the farm, the pool, right? If Avalanche is creating the farm, then you can probably trust Avalanche. But if Joe No Name, anonymous hacker guy, creates a farm and says, I'm going to give you 50 billion APY. Just put your Ethereum into my contract. Well, first of all, maybe he's going to just steal all your money. The contract could get hacked if he's maybe the creator is honest, but somebody else hacks it. You lose all your money. So you want to make sure the smart contracts are audited if possible. And again, rule of thumb: the higher the APY is, the more risky it's going to be. Okay, I have this example here of the Iron Finance thing. So you saw here that if you look, if you look here, oh great! Like in the space of like a couple of weeks, I think it went 40x, 30, 40x, and then crashed to nothing because of some they had some kind of exploit in their protocol, and went to basically zero. It's worth nothing now. So if your money stuck in Titan tokens for those 2 weeks, you were making money, right? But if you didn't sell it in time, you had nothing left. So that's why maybe you want to use that farm and farm and dump, and not farm and hold, because you're scared that's going to happen. And now I'm going to show you some tools to use. Okay, so you know the basics now. These are the basics you need. This is going to work on basically any protocol you choose. These are the basics you're going to need to know. You can borrow and lend. You can create LP tokens and then stake the LP tokens and then harvest the rewards. I'm going to show you a few tools now. Okay, it's going to show you something to manage your portfolio wallets, maybe spy on other people's wallets, show you a website that actually reviews smart contracts, take a look at some DeFi analytics so you can decide what protocols to enter, what apps might be worth your attention. So these are the basics now, all right? So we're going to get into a little more advanced stuff now. What is this? Benki? I don't want to know about Benki. This was the bridge. I'm done with that, I think. This is Aave. So let me show you Aave. So Aave, people borrow and lend money, right? So once Aave launches if Aave ever launches on a new network, that's probably a network that you should try to accumulate tokens for or start paying attention to. Okay, when Aave moved to Polygon, Polygon blew up, right? Aave moved to Avalanche blew up. So you can switch here between networks and check out the APR here and see whether it's worth your time to farm. So this has been going down over time, but they're still paying quite a lot to deposit your USDC over here. So that's Aave. Another thing you can look out for, okay, is if they announce that they're going to have incentive programs for that chain. For example, Binance said in October, we're going to spend $1 billion, with a B, guys, $1 billion to incentivize people to develop and farm on Binance Smart Chain. Well, I mean, I didn't really like Binance Smart Chain, but because of this, I told Nest Club members, okay, you have to pay attention, just because this is too much money to ignore. Avalanche is taking off right now because they have this Avalanche Rush incentive program. I think if Avalanche Rush runs out, once this is done, people are going to move to wherever the highest yield is. And that's the thing with yield farming. People always move to the place with the highest yield. So unless you see some future there in the protocol, you see something else more than just a high yield, you probably don't want to bag hold for too long. Okay, so right now, everybody's like, oh, Avalanche is peaking. Avalanche is hot. Right now is probably when you should start selling your Avalanche, and you should have been accumulating your Avalanche back when they announced it, August, and then selling it now, right? But I mean, I guess you could still. There's still more incentives left. You can still farm it. When Phantom announced their boost, the Phantom token went up in price. Phantom also kind of blew up a little bit. It had its moments because of this incentive program. Okay, and it is more for developers, but still. So when you see any of these, that's a sign for you to pay attention to the ecosystem, and maybe you can consider accumulating. Okay. Uniswap V3, no, it's a little. Okay, if you want to know, Uniswap upgraded to V3. I told you the liquidity pool thing just now, right? They're just going to balance it automatically, half. Uniswap V3 allows you to decide if, I'm going to put my money into the ETH USDC pool, but only while it's trading in between this certain price range. So if it goes below this price or above this price, I don't want you to use my liquidity anymore. So Uniswap V3 lets you do that. You can go to Uniswap and check this out if you need to. I think it's a little more complicated than you need to know. So yeah, you don't have to worry about that. Okay, portfolio trackers. I like to use Apeboard. Apeboard, you see they have all these different chains. So you can enter your address, right, on that chain. So let's say I have my chain here. It's on Avalanche. Enter it here. And it'll automatically detect, okay, I have, on this address, and this address, it's actually on, I have this much on AVAX, this much Matic. Did you see that worthless Titan? Yeah, I have a little bit of that left. So it's going to be over across all these. So if you notice that this address I can actually use it on Ethereum, on Avalanche, on Phantom. This doesn't support Phantom, or it does support Phantom. So by entering one address, it can show me all the assets I have on all of these networks. Okay. That's one. By the way, there's also this tool here, this Ape Bridge. Basically, you can use it to say, if I wanted to transfer assets from Solana to Polygon, what bridge can I use? How much is it going to cost? And you click that to open the bridge. So you want to transfer from Ethereum to Polygon, let's say. Then you pick, okay, which one's the fastest? Which one's is the cheapest? Maybe you open the bridge and it actually doesn't have the asset you want to bridge. Then you come back here and pick a different one. Okay, so these are a bunch of different bridges. So you don't have to keep Googling it. You can just come here to Apeboard and pick the correct bridge. Pick the bridge you want. So that's Apeboard. Zapper does a similar thing. You put your address in there. You connect your MetaMask, I guess, or you put your address in there. Then it's going to show you the net worth of your portfolio, but sometimes it doesn't have all the tokens. And it also tracks NFTs, but it doesn't track the NFT value very accurately. It'll show you, right? Okay, you have this many assets on Avalanche, this many assets on Polygon, this many assets on Ethereum. So you can use that. Once you're yield farming, this is helpful. And you can also use Zerion. Zerion, similar thing, tells you all your assets. It's not my wallet, by the way. I wish this was my wallet. It'll show you the history of your trades. You can go into a single asset that you have in your wallet, and it'll show you the history of your trades of that asset on your wallet. When you bought it, what price you bought it at, the price you sold it at. So I like Zerion, but it's more for Ethereum, not really cross-chain. Apebridge is more cross-chain. It has a little bit. It has like minus smart chain or a little bit. And now here, I'm going to show you why am I looking at this wallet. This wallet is actually it's supposed to be an Alameda wallet. Okay, so these guys have $63 million. So you find a whale. Maybe you find somebody who's trading your asset, and you notice that that they're making actually, how do you know? Okay, I'll show you how to find the address in a bit. Okay, so you find an address of some whale on Twitter or on a trade. You paste it in here, then you can start seeing what tokens they hold, number one. So then you start paying attention. Okay, this guy's holding a lot of Spell. Maybe I should start looking into Spell. Why is he holding so much Spell? $8 million worth of Spell. Maybe I need to pay attention to Spell too. He's holding some Gods Unchained tokens. Bitcoin, Shiba Inu. Okay, maybe I need to pay attention to that. You can see if they are selling. If this guy's constantly dumping, if this guy has dumped all of his Spell, then maybe you start thinking, okay, do I need to dump my Spell too? You can start looking into that, right? You can also start looking at, okay, this guy bought a lot of spell. Is there is there some kind of spell farming thing that I need to be looking at? You can also check that out. All right, and I should actually show you how to find those addresses. Okay, so let's say you go to Dex Tools, and you have a pair that is, I don't know what it's, Saitama pair, let's say, okay? The Saitama coin. You're trading this coin, you notice some whale is selling a huge amount. Okay, 12 ETH, sure. Should look at the transaction, I guess. See the whales getting a huge amount, so you get his address. Gets his address 0xf. I wonder if is it the same? I think, yeah. So you can actually copy it from here, and then you paste it here in Zerion, right? And you can actually see what this guy holds, what he's been trading, whether or not you should be trading the same stuff he is, whether he's been profitable over time. Yeah, I'm not gonna wait for that to load, but you get the idea, right? You can use this to spy on other people if you want. You can have a list, a bunch of different wallets in here, and just swap a bunch of. You can have a bunch of different wallets in here, and just swap the different whales addresses that you're looking at and see what they're doing. That's your intel right there for your yield farming. Okay, this is alpha right here, guys. Taking notes. Okay, any questions so far? Questions? No questions? Moving on, okay? How do you know if a smart contract is trustworthy? How do you know if you should be farming on that platform? You can use this website. Is called RugDoc. So RugDoc has AVAX farms. Does it have others? IoTex. It might have some others in the future, I guess. There it is. Yeah, BSC, Phantom. Yeah, it has a lot. Solana. So basically, it's going to have a risk rating. If they've looked at the smart contract, then they're going to give a risk rating. If it's not on here, then it's not on here, right? But if it is on here, then you can see, okay, this one says high risk, then maybe don't farm it. This one says medium risk, maybe you want to give it a shot. This one says some risk, okay, then you want to just look at the ones that are low risk. You can filter. Can you search? Filter? Is that working? Yeah, you can filter. Let's say on Avalanche. Is it working? Okay. What's going on? It's working. What's happening? All right. Okay, yeah, it is working. Okay, cool. So yeah, you can see very quickly all the low risk farms on there. Then you go and check that out. I don't know what this is. Mermaid swap. Okay, maybe I'll go see what mermaid swap is. This is how you do your research and start looking for farms, but not totally new. This is something somebody else has looked into the smart contracts to see, whether it's good or not. Not loading. Not going to waste time on that. You get the idea. Okay. So that's RugDoc, rugdoc.io. You can look at that. Another thing you can do is look at the bridging information. So I showed you guys how to bridge before, right? I showed you how to bridge from Ethereum to Avalanche. Here. So you can come here to uniwhales.io, use their app, and use their bridge trackers for different networks to see how much money is being bridged in and out of different networks. Why do you want to know that? Well, if a lot of money is being bridged over to Avalanche, that means somebody thinks it's a good idea, or a lot of money is entering the ecosystem. If a lot of money is in the ecosystem, it's not going to be there sitting around. It's going to be in there buying stuff, farming and buying stuff. So if other people are moving money over to farm and buy stuff, maybe you should also move your money into farm and buy stuff. Conversely, if people are moving their money out of Avalanche, if you see here deposits and withdrawals, you can see here that deposits have outpaced withdrawals. Okay, and if you see deposits kind of dipping, maybe you should also consider selling, getting out of the ecosystem, because people, apparently there's less money left in the ecosystem. People are moving money out of it. Then there's less money to buy stuff. Well, that only follows that the price is probably not going to go up as easily. Okay, that's just the basic idea. So you see a lot of money entering. You see this like huge bar here. This is deposits. And can I zoom in here? Yeah, I can zoom here. Zoom in. Okay, you see this huge bar here. More deposits than withdrawals. It's a lot of money. So maybe, at that bar there, you said, okay, maybe I just start paying attention to Avalanche now. You see over here, this bar here. Oh my gosh, what's happening here? There's a lot of withdrawals. Maybe I'm gonna start farming somewhere else. Not just, it doesn't have to be just from one day. Over time, you can see what assets are being deposited and withdrawn as well. That's the basic idea, okay? And you can do this for different chains. Phantom, Avalanche, if you see. Let's see what Phantom is doing. Should I be depositing money into Phantom? Transaction count's been going up, but deposits, withdrawals, looks like a lot of withdrawals in late October. Withdrawals kind of, okay. Deposits are starting to outpace withdrawals. All right, undecided. Maybe it looks like it's going up. Green's going up a little bit, so maybe I should start depositing in there. This is just one way, okay? This is not like the only way you should. Let's look at Arbitrum. Actually, I'm curious about Arbitrum. Are people using Arbitrum? Are people depositing money into Arbitrum? Let's see. And people don't only use the bridge. People use, they use KuCoin, right? But this is the people that do. Okay, it's loading. Let's see. Ooh, I like that. Right? This means, hey, I should be paying attention to a lot of deposits that are happening on Arbitrum. Yeah, pay attention to that. Look at that spike. Whoa. Okay, I have to go check what's happening on Arbitrum. Right there. Okay, that's the bridge. Look at the bridges on uniwealth.io. That's one way to see whether or not you should go into or out of ecosystems. Another way to see whether you can trust, to look into whether you should move into an ecosystem, and also whether or not you should move into farming a certain project. Okay, it's to look at the TVL, basically the value of the tokens locked inside that app or inside that ecosystem, that chain. The higher the TVL, the more money's in there. That's kind of an indicator that people trust it. If people trust it enough to put millions and billions of dollars inside the network, then it's probably safe enough for you to put your money in there too. Conversely, it also means that you're late. If there's $1 billion in there already, you're probably late. So you want to look for something that's pretty high TVL, not zero, but maybe not 10 billion, because 10 billion you're probably too late for that. But if you have a lot of money, if you have $1 billion, you want to get into the advanced, into the ecosystem that has 10 billion, because you want to make sure your money is safe. So you can see here the ecosystems that have high TVL, and you can see the TVL that has changed over time. So Avalanche in the past 7 days has been gaining in TVL. In the past 1 day has been gaining in TVL. So this is bullish. So then now you go and check out what's happening on Avalanche. You go to RuckDoc and see what's on Avalanche that I can farm. You can look on Twitter, whatever you want. So Binance has been going down. So maybe you decide, okay, maybe not so bullish on Binance. Maybe I shouldn't be farming on Binance. But short term has been going up just today. So this is the overall the chain that you want to enter or exit. You can also look at the different. Let's say you want to farm an Avalanche, okay? You want to look at the let's say what to farm. What is this? No, protocol. Avalanche. Huh? Oh, okay. If you want to look at what to farm, you can do this market cap by TVL thing. You can look at different DApp uses, DApp usage, and see how much TVL is in that DApp to see if you can trust it. So if you noticed people, I don't know, you find some farm token, right? And you see that, I don't know, CRO, 57 million in there. Okay, you can probably trust it. It's not probably going to rug, but if something has super low TVL, I don't know what this is. This, I don't know. These tokens don't even have any TVL. Let's say this one is 5,000. Okay, maybe you should be very careful if you want to enter this. Maybe either you're super early or it's not trustworthy. People don't trust it. So you can look at that to see whether you should enter an ecosystem, enter a DApp. You can also look by protocol. So I'm here. I'm on Avalanche now. I'm looking at all the DApps on Avalanche, and it says here Joe has second highest TVL. So if I put my money in Joe, I can feel relatively safe, relatively assured that my money is probably not going to get hacked because 2.59 billion worth of assets is on there. But let's move down a little bit. Let's say if somebody said, hey, you should farm, Gondola Finance. And look at the TVL here. Okay, some people are on there. Maybe I'm early. Maybe it's worth checking out. Then you can take a look there. But someone says, hey, take a look at Growth DeFi, and you see like no TVL on here. Maybe you shouldn't enter into it. But this is just very quick look. This isn't super updated all the time as well. So even if this says 0, maybe they move to a new contract. I don't know. So this is just a very quick way to scan. This is not the be-all, end-all way to decide what to farm. Okay, so your uni whales for deciding the ecosystem. DeFi Llama helps you kind of take a look at the TVL, the money inside each DApp, each ecosystem. Okay, and those are all the little tips and tricks. Okay, so now the people who want to know exactly step by step how to trade, how to swap, how to enter an LP token, I'm going to show you that now. Okay, let's say I'm on Trader Joe, and I wanted to enter this Joe AVAX. So this Joe Rush, this Avalanche Rush, you get extra incentives. So let's say I want to farm this. What do I need? I'm going to need Joe AVAX LP tokens. Sometimes if you open the pool, they're going to have a link to the pool. They don't have that here. They don't have that here. So I'm going to have to do it manually. So Joe AVAX. Joe AVAX. So I have some AVAX. I need some Joe. I already have half AVAX, so I need some Joe. Let's say I wanted to farm with 1 AVAX worth of tokens. So what do? I want half, right? 0.5 AVAX. I'm going to sell into Joe. I'm going to swap 0.5 AVAX into Joe. Confirm, pay the gas fee. Done. Let's wait for that to confirm. That's confirmed. I'm going to go to the, so it's right here. I could also search for it. Joe. Okay. It's not showing my Joe. Also not updating my AVAX. So let's refresh. There you go. So I have less Joe than AVAX. I want to farm with all of my Joe. So I'm going to do that max there. Okay. What am I doing now? Guys, I'm creating the LP token, okay? Approve my Joe. Confirm. Let's wait for that to confirm. Again, if you guys have any questions, feel free to type them in the comments, okay? I think it's approved. Is it approved? It's in the queue. Okay, it's pending. By the way, if it's pending here and you want to know what's up, how long it's going to take, how many confirmations. You can click there and take a look at the Explorer. It says it's still pending, so we have to wait for it to confirm. Now, because we're on Avalanche, this is relatively fast. If you were on Ethereum and you didn't pay super high fees, this might take you 30 minutes, an hour. Okay, so this is why you probably, if you're a beginner or if you have low funds, you should not be trading on farming on Ethereum, probably. So what's taking so long? Okay, let's say, all right, I've been waiting for a long time. This is too slow. I need it to happen now. You can click the speed up button. Pay extra gas. What's the AVAX price now? Okay, let's say you want to pay like, extra gas. And you can speed it up that way. Make sure you calculate the gas fees. I didn't really do a good calculation there. I'm not sure if I paid the proper amount. I have a question here while we're waiting, right? Which ecosystem do you recommend for the first try? So like I said in the presentation earlier, I like Solana, but Solana is not on Metamask, so it's not going to give you like the kind of quote unquote skills sort of you need to use MetaMask and trade on all the different networks. So maybe you want to start on Avalanche or on Polygon right now. But I also think you should start with you should do Solana as well. Okay, actually, while we're waiting for this transaction, oh, it's done. Okay, all right, it's approved. We're going to supply now. Confirm supply. Confirmed. Okay, while we are waiting for that to confirm, I'll show you. So if you want to farm on Solana, you need a Solana network wallet. It's not going to work with MetaMask. So right now, the recommended wallet is Phantom. So you install this wallet, and then it'll work basically the same as MetaMask. You'll get your seed phrase. You get your password for your wallet, and basically the same thing. You approve your transactions, and then you go to the Solana farms. One place to look for the Solana farms. Two places you need to go to on Solana. Okay, Radium to swap, and you can also farm on Radium. They have the farming here. Enter pools and farm. And then you can also go to tulip.garden, and this is the auto compounder that I showed you earlier. This will take, like this Radium farm here, it'll take your rewards and sell them and make the LP tokens and stake them in here. So Radium and tulip.garden are recommended starting points, but now, oh my gosh, you can see how many tokens are here. There's more platforms now. Orca, Ray, Saber. Used to be just Ray. You can just look at the APY here and see if you like it or not. And again, high APY, high risk, right? So this 29,000. Okay, I don't know what that is yet, but check that out and make sure you are okay with that before you enter, because that's suspicious. Let's see if that's confirmed. It's done. Okay, I've added liquidity now. Now I have LP tokens. What do? I come here to the farm. Let me remove this question. Come here to the farm, and I stake. I now have LP tokens, guys. I stake it. If it'll let me stake it. Okay. Approve. There we go. Approve. Confirm. If it lets me stake it, then we'll be good. In the meantime, someone's asking right now, do you recommend staking in a bull market? In a bull market, depends on what you stake, right? If you stake Bitcoin and you're going to hodl that Bitcoin anyway, I think that's actually a smart thing to do, to stake your Bitcoin if it's in a safe place, because you're actually earning some interest and you also keep your Bitcoin. You can actually withdraw that at any time, right? So you want to stake. Yes, you should stake in a bull market, but depends on what you're staking. And depends on the impermanent loss of the pair, right? If you're staking Ethereum and Bitcoin, you're going to hodl it anyway. Yes, yeah, go ahead. If you want to stake USDC, deposit USDC in a bull market, I'm not so sure. Maybe you want to do that because you want to manage your risk. But if you think Bitcoin is going up for sure, you think it's very bullish, why not just hold Bitcoin, get interest on your Bitcoin, and also get the price appreciation of your Bitcoin. But if you're in a bear market, you want to be staking your stable coins. You want to hold stable coins and try to earn as much yield as you can from your stable coins. So I mean, staking is good for both bull or bear, but maybe you change the way you stake or the assets that you stake or farm with. Okay, so that's done approving. Now I stake it. Confirm. So that's gonna confirm. I'll also show you guys how to sell your LP tokens and get back your Joe and AVAX. Okay. How did my MetaMask funds appear in Trader Joe? When you're on Trader Joe here, you can just connect. They'll have this connect button up here to MetaMask. Actually show you now. I'm already connected. Let me show you another. Some beginners, so no silly questions here. I'm also already connected here. Can I disconnect? Disconnect. I want to go to one that I'm not connected on. I think I'm not connected to Uniswap on this. Right, there you go. So you see a connect button there. So you click connect and you click MetaMask and then you just click connect, right? And then you'll be connected on Trader Joe. Then you can start doing all your trading and stuff. Okay, should be staking. Question here. When I'm in the Solana ecosystem, I'm able to buy only pairs including Sol, or can I do something different using D-Bridge? Okay. You can trade whatever pairs are available on the exchange. So, for example, here on Trader Joe, I can trade AVAX for, I don't know if I can. Well, okay, you're probably gonna find the ecosystem and every other coin. You can probably find a pair for that. But something like I don't know, like this coin and this coin, I don't think there's a you cannot trade that. There's no, because you need a pool. You need a pool in order to trade that. So you can trade all of these because there are pools in them. Okay, and the more liquidity is in the pool, the less slippage you're going to get. So any pool you see on the website, on the ecosystem, you can trade. The question was using a bridge. So this question is asking about using a bridge. You can bridge, again, you can bridge whatever asset they support. The only problem is that once you bridge over, you have to make sure that you can bridge whatever asset they allow you to support. But this is not all the assets. So that's the bridge, okay? Is it done? I want to farm, man. Is it done? It's done. Okay, you can see here now I'm staked. It's farming. And at any time, Once this isn't enough, once this is worth the gas, I can click the harvest button here, pay the gas, and confirm and harvest it. But probably not worth the gas right now because I only just staked it, so it's not worth the gas. Now I'm going to show you how to get out. So let's say you're done. You can unstake. Most of the time when you unstake, they'll probably harvest for you automatically too. I'm not sure if this will. Let's see. So let's say I'm done farming. I want to sell my stuff. Let's unstake. And then once I've unstaked, I will get my LP tokens back. Then I go back to the Joe AVAX pool here, and I click on remove, and then I click approve and remove, and then I will get back this much Joe and this much AVAX. Okay, I'm not going to do that yet. Because I want to show you the auto compounder. Okay, so similar concept. I have those Joe AVAX tokens, right? Am I connected? The right pool? Let's see if it's the right pool. Yeah, it's the right pool, so I should be able to. So those LP tokens that you made, you can actually come here on Yield Yak, and I should be able to deposit them, but it's not showing. Okay, maybe I have to refresh. Joe AVAX. So if you don't want to, come on. What's going on? Oh, what's happening? Okay, someone said, can you give more examples of bridges? My gas fees were a bit spicy. Well, that's because I was bridging from Ethereum, and Ethereum gas prices are high. So that's just the way it is. Any other bridge I use, if it's from Ethereum, I'm going to pay high gas fees. If I'm bridging back from Avalanche to Ethereum, I'm going to pay Avalanche gas fees. That part is going to be cheap because Avalanche is cheaper. So it's not actually the bridge's fault. It's more what is going on? Okay, anyway, I want to look for... There we go. Okay, I just had to refresh. All right, so I'm going to deposit my liquidity pool tokens. I want to auto compound. This is the auto compounder. This is yieldyak.com. Deposit them in here. Sign it. Confirm it. Paying the gas fees for that. And then once that's deposited, this is going to automatically compound. I'm going to earn the 113% APY. Okay, so someone's asking about... So the question, okay, someone said it's about the coin that we're bridging, not the bridge itself. No, it's not about the coin you're bridging. It's about the network you're bridging from. Because if you are bridging from the Ethereum network, right, any token you bridge, right, you could bridge an Aave token, whatever, it doesn't matter. Because you're on the Ethereum network, you have to pay Ethereum network gas fees. Anything you do on the Ethereum network, you pay Ethereum gas fees. So bridging from Ethereum to Avalanche, you have to pay high gas fees. Now, if you were on Avalanche and you have to bridge back to Ethereum, well, now you're going to pay the Avalanche network to process your transactions for you. And because Avalanche has lower fees, you're going to pay less gas just because you're doing it on Avalanche. You're not doing it on Ethereum. That's all. That's the reason for the higher fees. Auto compounder. Is that done? Should be done. It is, I think it's the, where'd it go? It is deposited now. And then once I'm done, this is going to, I'm not sure how often, but this is going to automatically harvest the rewards and get me more LP tokens over time. I want to withdraw it. I withdraw it. And I will get the LP tokens back in my wallet. And then I go back to Trader Joe and I'm going to show you actually removing it now once I get those tokens back in my wallet. Okay. Then someone's asking about Donkey Finance. What is Donkey Finance? I don't know what that is, but the principles I've shown you here, I'm pretty sure, I'm 99% sure they will apply to whatever this is. Is this it? Don/Key Finance? I don't know. Leaderboard. What is this? On BSC. What is this? Oh, this is a other people are farming and you just follow them. This is I guess it's kind of like an auto compounder kind of, but instead of you deciding what to farm, I'm guessing, okay, I actually didn't take a quick look, but this looks like it. So instead of you deciding where to farm, you just decide, okay, this guy has good performance. I will deposit my money in here and just let him do whatever he thinks is good with my money. So they'll describe their strategies here, it looks like. BNB yield farming strat combines liquidity pools of 3 top-tier coins paired with BNB. So he's going to be farming whatever 3 strategies this is. This guy's going to be farming on Revolve, on Cryptos, on PancakeSwap. This is basically like copy trading, but instead of copy trading, this is copy farming. I don't know, guys. I would rather not. You're already taking control of your farming, right? I don't want to give it over to somebody else. But yeah, sure. If you want, you can try this out, I guess. But no, I mean, not telling you to do this. I haven't checked it out, but this is the basic idea. So you whatever token they say you should. You want to farm with AVAX. They have these 2 strategies here. Deposit your money in there, and then you'll get whatever APY they promise with their strategy. Okay, all right. It's been like an hour and a half, guys. I need to I need to get some rest. So we're basically in a nutshell. Okay, if you don't know how to do anything, oh shit, shoot. I said shoot. I didn't say. I didn't withdraw my tokens yet. I have to show you that. Draw my AVAX Joe tokens. Okay, this is when you have your liquidity pool tokens, you can remove them from the exchange that you've made the LP tokens on. Approve it, do the max, and click remove once that's done, and you'll get your original tokens back. Where should you farm? I suggest Solana, but you can also go Avalanche, Polygon. Use the techniques I've shown you to look where to farm. I like Solana because FTX is backing it. They're investing a lot of money into it, and FTX is going to continue to have more money. So over time, they're going to incentivize a lot of developers over to the ecosystem. More money is going to keep coming in because to try out all the new dApps, there's just going to be more money splashing around in the ecosystem. So me personally, I'm in Solana. I'm accumulating more Solana, more Ray tokens, a bunch of other different smaller tokens. and a lot of play to earn projects are on Solana as well because of the lower fees. So it's play to earn is pretty hot. So that's also why I'm bullish on Solana as well. So a lot of reasons why I think you should try Solana, especially if you have access to FTX. It's going to be very easy for you to deposit, onboard, on ramp, off ramp your assets, right? Any more things you want to discuss, you can feel free to discuss them in the thread, in the Trading Congress chat. If you're a Nest Club member, you can discuss it in the Fundamental Analysis channel with me. You can tag me, or you can just discuss with your fellow members. And I think that's going to be it for today's stream, right, guys? And I hope you're enjoying the Trading Congress. And tune in tomorrow. We're going to have many more streams. Bye, guys.